Hey guys, welcome to Sky Talks Trading. We have got a very important video today about Nio, so any Nio holders, you're definitely gonna wanna listen closely to this video. So Nio, just like many other companies in the auto-making space, they were forced to stop production this year simply because of the global semiconductor shortage. Semiconductor chips, if you don't know, they're pretty important. They're widely used in smartphones, computers, and other electronic devices. They are especially important to Nio, who make premium electric vehicles. Without these semiconductor chips, it's like, imagine if Netflix didn't have all those terrible Netflix original teen movies, which I know they're not for my demographic. They're not for 30-year-olds, but they're so terrible. But anyway, so Nio's production stoppage in late March had little impact on the company's record vehicle deliveries in Q1, but it could affect future production numbers. That being said, shares of Nio have just amazingly outperformed the broader market over the past year. They reached all-time high earlier in this year, but then fell quite a lot and has been trading mostly in a sideways motion since early March. Nio's shares have provided investors with an astronomical total return of 1,171.9% over the past year, and that is way over the S&P 500's total return of 45.5%. I mean, it is just insane. If you are a Nio holder, I'm sure you are super happy right now. Nio Inc. reported late on Thursday. They basically reported on their quarterly results and sales that were above Wall Street expectations. But still, it did renew investors' concerns about its supply chain and impact of the chip shortage that is plaguing the Chinese electric car maker and other electric car and automakers around the world. Earlier this week, Tesla and Ford reported first quarter earnings, and they called attention to the ongoing chip shortage, which Ford said would get worse before it gets better. So, it's going to get worse, but it's going to get better. So we just gotta hold on tight through the stormy weather, which, if you're an investor, you know how to get through the stormy weather. So a quote from Chief Executive William Lee, he said, "The overall demand for our products continues to be quite strong, but the supply chain is still facing significant challenges due to the semiconductor shortage." Nio said it delivered 20,060 vehicles in the first quarter, which is an increase of 423% from the first quarter of last year, and a rise of nearly 16% from the fourth quarter. Nio will continue to invest in new products and core technologies, as well as service and power network expansion, particularly battery swapping and charging facilities. And battery swapping is what got a lot of people very excited and made them ultimately hop on the Nio train. Every year and every quarter, Nio continues to improve. If I'm reading the whole situation correctly, they also have $7 billion in cash. Unlike what I gather from Tesla and the other day, 98% of revenue from Nio is from cars. Margins have improved yet again. And, not to make any promises on stock prices, but they are really setting themselves up for huge success, and therefore setting Nio holders up for huge success. Gotta bear in mind, Nio is still a young company and the demand is there. So, we want them to spend money on R&D and growth and infrastructure. The more focus on growth and technological improvement now will result in much higher profits when Nio does become profitable. Nio is expected to become profitable on a full-year basis in 2022. Not that long away now. Time flies, doesn't it? But also it goes really slow. It's strange. According to Deutsche Bank analyst Edison Yu's team, Nio's delivery guidance implies that second quarter sales could range from RMB 8.15 billion to 8.5 billion, which is broadly in line with the team's estimate of RMB 8.26 billion and above the market consensus estimate of RMB 7.9 92 billion. So I think we are all pretty bullish on this stock, and hopefully you've been picking more and more up on those dips. I really think Nio is a diamond in the rough, and it will dominate the electric vehicle market for years to come. Also, Nio is building Nio Park with 11.3 square kilometers, over 10,000 R&D personnel and 40,000 technical workers, and an annual production capacity of 1 million vehicles. Nio Park is expected to realize a gross yearly output of RMB 500 billion. The company also announced a partnership with Chinese oil giant Sinopec Shanghai Petrochemical Company Limited. Wow, just rolls off the tongue. For setting up its power swap station at the latter's gas filling station. You know, all the analysts were thoroughly impressed by the 25 plus vehicle margin, and they commented that it is unheard of for a relatively new company. Not even Tesla has that type of gross margin. So, long-term, Nio is going to be one of the biggest companies in automotive industry. That's the key takeaway. And yeah, big picture looks really good. You know, revenue, margins, brand, demand, production capacity will improve. And by the end of the year, that's what the market will be talking about, and not this chip shortage. So that is all for today. Very positive feeling overall about Nio. And I hope you are also feeling positive just about everything as well, you know, which that's probably a lot to ask for. Okay, I hope you're just feeling positive about Nio.